Welcome to the basic financial analysis, ratios, and performance monitoring in microfinance banks. This is Lesson 9 of the third and final part of this topic. Lessons 1 to 9 are readily available on the Microfinance Arena YouTube page. The lectures have been well prepared for easy access and understanding. Do take your time to go back to the lectures 1 to 8 in the description box below to know the connection between all the lessons. Before we proceed, we encourage you to subscribe to our channel. You have a lot to learn, especially if you're a microfinance professional willing to excel in your chosen career. On this final note, we will be discussing another important short topic which focuses on the bank's book of accounts. This is the statement of cash flow, or a cash flow statement. Now, what is a statement of cash flow? The statement of cash flow of an MFI shows the organization's liquidity assets and represents one of the key financial statements. Acting as a bridge between the statement of financial position and the income statement, it identifies the inflow and outflow of funds of an MFI and the application of fund usage over a period of time. It also analyzes how cash is generated and utilized over a particular period of time. Businesses usually come to extinction when there is no cash to run the business or when the MFI runs out of cash. Let us discuss the importance of the cash flow statement. Why is there a need for this? The cash flow statement is necessary in order to compare cash availability from operations to net income. When cash flow statements are compared, it helps active players like the board of directors, microfinance institutions management, owners, investors, regulators, and analysts measure how well the organization is performing operationally. The true picture of money received by the microfinance institution from its operations is clearly defined in a cash flow statement. In trying to understand the cash flow statement, we need to understand that it centers around two distinct processes, namely, I, cash flow statement, and 2, cash flow plan. We have already discussed the cash flow statement in length, so we'll be focusing on the cash flow plan. A cash flow plan predicts future inflows and outflows of cash timing for the microfinance bank. Projections can be prepared months in the future with the hope of avoiding a cash shortage. Effective cash flow plans are achieved if the microfinance bank business plan is detailed enough to understand how the inflow of funds and expenses are well appropriated. The cash flow components. These comprises of 3 parts, namely 1. Operating activities, 2. Investment activities, and 3. Financing activities. Cash flow component is based on past cash flow records or historical reports aimed at explaining how or where cash was generated from, how it was utilized, and the available balance of the MFI. Unlike a client's cash flow, which takes cognizance of income and expenditure only, an organization's cash flow classification is categorized into operating, investment, and financial activities. Looking at the operating activities first. These are income-earning activities for services provided by the microfinance institution. It comes in the first section of the statement of cash flows. It takes cognizance of operating activities by reconciling cash and non-cash items. The net result of operating activities is achieved by deducting receivables from net income. Investment activities comprises expenditures made for resources that would likely generate future income for the MFI and comes as the second section of the cash flow statement. In this activity, an MFI can generate income by selling off assets or equipment. Financing activities comprises funds or resources obtained or returned to investors either through short or long-term borrowing or through donor activities. This is the last section of the cash flow statement and shows an overview of how cash was used to finance the business. Let's talk about the cash flow summary. This has 3 main features which show that. This is the last part of the cash flow statement. It reconciles the summation of the operating, investing, and financing activities of the cash flow position. It ultimately connects to the balance sheet. The cash flow items. This shows the type of items you can find in the cash flow statement. Looking at the operating activities first, we have items that include accounts payable, depreciation, amortization, prepaid items. The next is in the investing activities. These include cash spent on property, plant and equipment, other physical assets. The final item on the list is what we find in the financing activities. They include share and dividend, proceeds from loans, cash flow methods. There are two ways to prepare a cash flow presentation. This can be prepared, namely, 1. The direct method. The direct method is presented as a cash flow, highlighting the transactions from sales to purchases and other expenses. We then have the second one, the indirect method. The indirect method is presented as a reconciliatory report from profit to cash flow. Showing us a sample of the direct and the indirect cash flow statement will surely give us a clue as to what we are talking about. First, let's look at the direct method. See the sample. Remember, as explained, that it is presented as a cash flow highlighting the transaction from sales to purchases and other expenses. You can pause to have a better understanding of the table. Then the sample for the indirect method. Also, remember that this method is presented as a reconciliatory report from profit to cash flow. On a final note, the indirect method is widely recognized and commonly used to present reports in financial institutions. Remember that each organization usually has its own items for its cash flow analysis. While the format is usually the same, the sample used is a guide to help you have an overview of what to watch out for when analyzing an MFI cash flow. This concludes our final Lecture 9 and the parts. Do take your time to go through all the other lectures we have posted. You can find them in the description box below. Do remember to subscribe to Microfinance Arena for more enriching and engaging content.